You bought something small online, maybe a pair of sneakers or a gadget, and instead of paying $120 upfront, you clicked a button that said, Pay in 4. No interest, no stress, just 4 easy payments. It felt harmless. But here's the uncomfortable truth most people don't realize. That one click might be doing more long-term damage to your finances than a traditional credit card ever could. And the worst part is, it doesn't even feel like debt. Today, we're breaking down buy now, pay later versus credit cards and uncovering which one is secretly draining your financial future. Let's start with why buy now, pay later, or BNPL, has exploded across the United States. Platforms like Affirm, Klarna, and Afterpay have turned borrowing into something almost invisible. There's no hard credit check in many cases, no immediate interest, and approval takes seconds. Psychologically, it removes the pain of paying. You're not spending $400 anymore. You're just committing to $100 today. That subtle shift tricks your brain into spending more than you normally would. Studies have shown that consumers tend to spend significantly more when BNPL is available compared to using cash or even credit cards. Now compare that to credit cards. Credit cards have always had a reputation for being dangerous, and to be fair, they can be if used incorrectly. High APRs, late fees, and compounding interest can trap people in cycles of debt. But here's the key difference. Credit cards are structured, regulated, and visible. Every month, you get a statement. Your balance, your minimum payment, your interest charges, all clearly laid out. It's tracked in your FICO score, which means your behavior has consequences, both good and bad. If you use a credit card responsibly, pay on time, and keep your utilization low, you're actually building your financial profile for things like mortgages, auto loans, and even job applications. BNPL, on the other hand, operates in a gray area. Many of these services don't report to credit bureaus unless you default. That sounds like a benefit at first, but it's actually a hidden risk. Because it's not being tracked like traditional credit, people tend to stack multiple BNPL purchases at the same time. One payment here, another there, and suddenly you're juggling 5 or 6 different plans across different apps. There's no single dashboard showing your total debt exposure. It creates a fragmented financial reality where you feel in control but you're not seeing the full picture. And then come the late fees. BNPL markets itself as interest-free, but that doesn't mean it's cost-free. Miss a payment, even by a few days, and fees start piling up. Unlike credit cards, where interest accrues gradually, BNPL penalties can hit instantly and repeatedly. And because payments are often auto-debited, a missed payment can trigger overdraft fees from your bank as well. What started as a simple $50 installment can quickly spiral into something much more expensive. There's also a deeper behavioral issue at play. Credit cards, for all their flaws, force you to confront your financial habits. Your credit limit, your statement, your FICO score, they all act as guardrails. BNPL removes those guardrails. It turns spending into something casual, almost gamified. You're not borrowing money, you're just splitting payments. That language matters because it changes how you think. Over time, it can normalize living beyond your means without the immediate consequences that would usually stop you. Now, to be clear, credit cards are not the hero here. If you carry a balance and pay 20% APR interest month after month, that's one of the fastest ways to destroy your finances. But at least with credit cards, the risk is transparent. You know the rules. With BNPL, the danger is hidden in simplicity. It's not the cost that gets you, it's the accumulation. Power few. There's also the long-term impact to consider. Using a credit card responsibly can help you qualify for better interest rates, build a strong credit history, and even unlock rewards like cashback or travel points. BNPL offers none of that. It doesn't help you build financial credibility. In fact, if misused, it can leave you financially stretched without any of the long-term benefits. So which one is secretly destroying your finances? The answer depends on how you use them, but for most people, buy now, pay later is the more dangerous trap precisely because it doesn't feel dangerous. It's easy, it's fast, and it's everywhere. And that's exactly why it's so powerful. At the end of the day, the real issue isn't the tool, it's the mindset. Whether it's a credit card or BNPL, you're still spending money you don't currently have. The smartest approach is to treat both as tools, not solutions. If you can't afford to pay for something in full today, you should pause and ask yourself if it's truly worth it, because financial freedom isn't built on convenience, it's built on control.